Hello, you are welcome to my accounting channel. I will first introduce myself. My name is Daniel Amakun, an ACCA chartered accountant. I have provided accounting services such as bookkeeping and others, including teaching accounting for more than 20 years. Today, the lesson is accounting sales, return invoice, and receivables. Let us get into the video. I have prepared this simple notes for this particular lesson. I will explain it to you gradually so that at the end of the lesson, you will really understand the subject. So the lesson is sales, return invoice, and receivables. Our learning objectives are A, meaning of sales, B, recording of return invoice, and C, meaning of receivables. So let us start. Lesson 1, sales. In accounting, when we say sales, what's the meaning? In accounting, sales means the sale of those goods in which the business normally deals in, and which were bought with the prime intention of resale. For example, if a business sells computers, if it sells computer and a printer, the computer is sales to the business, but the sale of the printer is a sale of an asset. So in accounting, when we say sales, it means that that particular goods that the company deals in, that is what we regard as sales. So I'm giving an example that, for example, if a computer deals in the sales of computers, but if it sells computer, it is what? Sales to the business. But if it sells a printer, because it's not that particular goods that company deals in, we call it is not sales in account by what? It's an asset that has been sold. Okay. We go through a lot of examples because accounting is a principle. And the more you go through a lot of examples, the more you understand the principle, the more it becomes familiar to you. So let us start. Example 1. May 10, Morris Limited sold goods to Miller Limited for cash, $25,000. Record the transaction in Morrison accounting books. So before we go on, in accounting, every transaction has been recorded twice because of the double entry principle. It has been recorded twice because there's one account receiving the cash and the other account giving out the cash. So that's why accounting, every transaction affects two accounts. So for every debit entry, there's a corresponding credit entry. So we are going to use the double entry principle to record this particular transaction, including all the many examples. Please, I've made a video on the double entry principle, so you can click on the link below to go and watch that particular video. It will really help you to understand the double entry principle. So let us go through. So the solution, the T account shows the double entry in Morrison Limited accounting records as follows. A, to follow the double entry principle, first identify the two accounts involved, which are the cash account and sales account. Then B, the second step, credit the account giving out the cash, that is the sales account, and debit account receiving the cash, that is what? The cash account. Then the third step, you create a T account. So according to the double entry principle, the first step that you have to take is that you have to identify the two accounts involved. In this case, is the cash account and the sales account. So after identifying the two accounts involved, the next step is that you have to debit the account receiving the cash and credit the account giving out the cash. So in this case, the account giving out the cash, that the sales account, has to be credited. and the account receiving the cash, that is the cash account has to be debited. Then they go on to the tester, which so we create a T account. So let us create a T account. This is a T account. It shows the cash account. It has two sides. The left-hand side, which is the debit side, and the right-hand side, which is the credit side. And all you see date, details, and amounts. So the cash account receiving the cash, so it has to be debited. So it has been debited on the left-hand side. So we have date, 10th May, details, sales, the amount for $25,000. It says because the corresponding entry can be found in the sales account. So when we come to the sales account, because it is giving out the cash, it has to be what? Credited. So we are on the right-hand side has been what? Credited. So we have date, 10th May, details, cash, because the corresponding entry can be found in the cash account. And the amount is about $25,000. So the explanation is D. In Morrison Limited account, sales account has been credited with the $25,000, for it is giving out the cash, and the cash account also has been debited with the same amount because it is receiving the cash. So example 2, make to a Morrison Limited sold a van for $45,000 to Davis Limited for cash. Show the above transaction in Morrison Limited books. So we use the same double entry principle to record this particular transaction. So solution, the T account shows the double entry in Morrison Limited accounting records as follows. A, to follow the double entry principle, first identify the two accounts involved, which are the cash account and the van account. Then the second step, credit account giving out cash, that is the van account, and debit account receiving cash, that is the cash account. Then the third step, create a T account. So there are, as I said, in the double entry, so the first step, we identify the two accounts involved. Here we have the cash account and the van account. Then the second step is what? The credit account giving out the cash. In this case, the van account. Then debit account, we receiving the cash, that is the cash account. Then the third step is what? You create your T account. So the T account, the cash account, receiving the cash, which has been debited on the left-hand side. So date, 12 May, details, van, because the corresponding entry can be found in the van account, and the amount is about $45,000. So when you come to the van account, it has been credited on the right-hand side, date, 12 May, details, cash, because corresponding entry can be found in the cash account, and the amount is about $45,000. D, I'm explaining. In Morrison Limited accounting record, the van account, which is an asset, has been credited with $45,000, for it is giving out cash, and the cash account debited with the same amount because it is receiving cash. However, comparing transaction A and B, it can be seen that though the goods and van were sales made by Morrison Limited, goods have been credited in the sales account and the van credited in the assets or van account. This is because goods are the product that Morrison deals in. So as I said, the sales means the particular goods that the company deals in. And we realized from the two examples that Morrison Limited made sales, one goods and the other one van. But because the goods are the particular goods that Morrison Limited deals in, we recorded it or credited it at the sales account. But when we come to the van account, although it says, but it is not that particular goods that Morrison Limited. It's an asset that has been sold, so it has to be credited in the van account. Okay, let us go on. So that is our first lesson. Our second lesson is the receivables. So when we say receivables, what's the meaning in accounting? Receivables, they are customers who purchase goods and paid later. That is, they purchase on credit. So receivable means that most of the time, company may sell an item for what? For cash. But in some occasions, the company may sell and cash will not be received immediately. because the customer will buy on credit and pay later on. That is what we say, that the customer has become receivables to the company because it is not paying cash immediately, but later on. So let us look at example 3. On the 18th June, World Limited sold goods to Moon Limited for $75,000 on credit. How will this transaction appear in World Limited accounting books? So the same double entry principle. Solution: the T account shows the double entry in World Limited accounting records as follows. A. To follow the double entry principle, first identify the two accounting books, which are what? The sales account and Moon Limited account. B. The second step, credit the account giving out the goods, that is the sales account, and debit the account receiving the goods, that is Moon Limited account. Then C, the third step, create your T account. So they say in the double entry principle, the first step, you identify the two accounts board, and this one, the sales account and Moon Limited account. Then the second step is that what you credit the account giving out the goods, and you debit the account receiving the goods, and the account receiving out the goods. The account receiving the goods is what? The sales account, and the account receiving the goods is what? It's Moon Limited account. Let us continue. So the T account, this shows the T as a sales account. It has been what? Credited because it is what? Giving out the goods. So a date. And then we have credited in this particular case on the what? On the left hand side. So we have, sorry, on the right hand side. So we have date, 18 June, this is Moon Limited, and the amount of $75,000. Moon Limited, why Moon Limited? Because the corresponding entry can be found in the Moon Limited account. So when we come Moon Limited account, it is receiving the goods. So it has been what? Debited on the what? On the left hand side. So date, 8 June, 6, details, 6, and the amount we bought, $75,000. So explanation. D, in World Limited sales account records, sales account giving out the goods has been what? Credited with $75,000, and Moon Limited, who received the goods on credit account has been debited. So let me explain. World Limited sold the goods to Moon Limited on credit. He did not pay immediately. So that is why Moon Limited account has been what? Debited with the goods. Supposing Moon Limited had paid immediately with cash, then it's rather the cash account that will be what? Debited. But because he paid later, his name has appeared in World Limited account, and it has been what? Debited, receiving the good worth of $75,000. In this case, Moon Limited is now receivables to World Limited. So let us go on. Lesson 3. Lesson 3 is return invoice. When we say return invoice, what's the meaning? Just as a company may buy goods and return some perhaps due to damage or goods in transit, the same way goods sold to customers may be returned for 40 goods. In accounting, we call it return invoice. So let me explain. At times, a company may buy an item. Then when it receives the item, it will realize that the goods is either 40 or it has been damaged. It will return back the goods to that particular customer. In the same way, the company may make sales to a particular company, but the company, upon receiving the goods, will realize that the goods are 40, and they return the goods back to the company. Because the company is receiving the goods back, in account, we say this was return invoice. It has been returned invoice to the company. So let us look at an example. So example 4. June 20, let us assume that Moon Limited returned $6,000 of the goods sold to him. Record the transaction in World Limited books. Solution. The T account shows the double entry in World Limited records as follows. A, to follow the double entry principle, first identify the two accounts involved, which are the retained inwards account and the Moon Limited account. Then the second step, B, debit account receiving the goods, that is the retained inwards account, and credit the account giving out the goods, that Moon Limited account. So they say double entry principle, you identify the two accounts, but in this case, retained inwards account and Moon Limited account. Then the second step, debit account receiving the goods, that is the retained inwards account, and credit account giving out the goods, that is the Moon Limited account. Then the third step, you draw your T account. So you record the transaction in the T account. So here's the T account, retained inwards account. It has been debited because it's receiving the good. So on the left-hand side, you have date, 20th June. It is Moon Limited because the corresponding entry can be found in Moon Limited account and the amount of $6,000. So Moon Limited account, it has been what? Credited with the $6,000. So when you have date, 20th June, and details, return inwards account, and the amount of $6,000. You realize that first, World Limited sold the goods to Moon Limited. So as soon as the goods were received by Moon Limited on credit, it was what? Debited. That's why you see on the left-hand side, the goods have been debited. So you have date 18 June says, details says the amount of $75,000 when you receive the goods, then you return it. Now let me explain. D, in World Limited accounting record, sales return inwards account has been debited because World Limited is receiving the goods back with what? $6,000. And Moon Limited account has been credited with $6,000 because Moon Limited is giving the goods. The actual amount Moon Limited owe is now what? $69,000 because why? Initially he received or he purchased or World Limited sold $75,000 worth of goods to him, but he returned $6,000. So when you deduct $75,000 from $6,000, the amount owing Moon Limited is now owing World Limited what? $69,000. Well, we have come to the end of our lesson. Let's go through what we've learned today. Learning outcomes. A, understanding the meaning of sales. B, know what return inwards is. C, understanding the meaning of receivables. So we are and D, sorry. And D, able to record sales, return inwards, and receivables. We have come to the end of the video. Thank you very much for watching this particular video to the end. Please like and share for encouragement, comment for improvement, subscribe so that future weekly videos can be sent to you. Please watch the video several times. As I said, the accounting is a principle, and the more you do more examples, the more you watch the video, the more you understand it, and the more you become familiar with the principle. The second advice that I will give to you is that what you have to practice more questions, because it is a principle. The more you practice more questions, the more you become familiar, the more you understand the principle. If you need more questions, please contact me and I'll give you more questions. Also, as I said, I'm a chartered accountant. So if you want me to keep your books for you or provide any other accounting service, you can contact me through the link below. Also, if you want me to teach you, because I'm an accounting teacher, I'll give you accounting tuition, please, you can also contact me. Bye.